As a matter of fact, 53.16 is the 20-day moving average. If it breaks above that, that means that the trend to the upside will continue. And we saw that about the last week or so, where it had some momentum up there, but it's pulled back dramatically. Now, the bulls need to see 50.12 hold. That $50 level is going to be extremely important for the bulls in the midterm. Any type of liquidation below there is going to start challenging then long-term support, which is that $49 level. I say long-term support because that's where basically that's the 200-day moving average. You've seen prices being traded around that over the last 12 months. A break there could be a fundamental shift in the crude contract. Now, taking a look at a proxy to the crude contract, if you don't have access to the futures, take a look at USO, trading at $11.30. USO is down about 3.2%, about 37.5 cents. Now, the options are pricing in over the next 11 days that the USO contract could be trading in a range of either up 55 cents or down 55 cents. So really, you're looking at 12 to 10 and some change. The critical levels that you're going to want to watch on the upside, if you're bullish on crude contract and you're trading USO, you want 1157 broken. That puts the short-term trend in play to the upside. The bulls then will have the momentum. 1097, break of $11 is going to be a game changer for the crude contract and specifically for USO. That means if you're long USO, you could have some pressure. If you're bearish or you're thinking about a bearish position, that's a level you want to see broken. If you're going to see a midterm shift, there could be a fundamental change in the crude contract. Then 1091, that's going to be a level that long-term people have been getting in at lower prices over the last 200 days. A break there could put those longs in pressure, and that means that you could see some liquidation because of that price break. Now, there were two names that were notable that came out with, as we discussed this morning on the opening bell, Coke and Procter & Gamble. There was a downgrade at Goldman Sachs. Now, the problem that I typically have with these downgrades is that, first of all, they give you no context other than fundamentally these multinational companies are under pressure because of the currencies. What does that mean? And give me some context. So what it means really right now is they're coming out and saying that they are putting sell recommendations on the likes of Coke and Procter & Gamble because of these and many other fundamental issues that they see. Well, let's take a look at the technicals and see what they're setting up for us in the short term, and then also look out in the long term. First of all, Coke is trading at $41.39. It's currently down about 35 cents after this sell recommendation came out by Goldman Sachs. That's down about 0.8%. Now, the options are pricing in a range of 85 cents for the next 11 days. So that means that you could see Coke above 42, or it could be now down below into that 40 and some change level. Let's say 40.30. Now, that's the next 11 days. So now you have a range, 40.30 to 42. Great. Let's look at it over the next 375 days. What type of range could we expect in Coke? Well, you could see it as up or right now, the options that are expiring in January of 2018, they're pricing in a range of $6.62 over the next 375 days. Now, that's going to change when Coke's price change, implied volatility changes, interest rates, and so forth. But right here and now, it's giving you a $6.66 range, which basically is giving you 48 to the upside over the next year and down to 35, even 34 on the downside. So you got 48 to 34. Now you have a range that you can potentially work with that gives you context so that you're thinking about capital management. You know, am I going to deploy a full component to Coke if I want to go long? Am I going to go short? What are the expectations? 41.65 is a level that you're going to want to see broken again if the bulls are going to get some traction and you're going to see the upside challenge in the short term. 41.51 has to be retaken or at least held in this area right now if institutions aren't going to get more worried. If you see a further break below this level, right now it's trading right around 41.40, a further break with volume, that could give some momentum in the intermediate trend to the downside. 43.58 is long-term resistance. Now, Coke has been on the downside. I don't know where they were when Coke was trading at 48.50. They should have been out there giving this recommendation, but they're not. It's trading now on its lows that we've seen in the last 3 months. But now you have some context on Coke, both on the next 11 days and the 375 days. Now, Procter & Gamble trading at 84.30, down 72 cents or around 0.8%. 11 days, the options market is pricing in a $1.90 range. That means that you could see Procter & Gamble as high as 87 or as low as basically 82, 81 and some change over the next 11 days. Over the next 375 days, with everything as it stands right now at this moment, I now can put a range of around $14.50. That means that I could see it as high as 99 or I could see it as low as 70. That's where the market is pricing in the range for the next 375 days as far as the options are concerned and their anticipated potential move in the stock for the next 375 days. Now, what are the critical short-term levels and mid-term levels that you're going to want to watch? 84.65. You want to see 84.65 broached. If it is, that means that the bulls are starting to take action and traction in the short-term trend. A break of 84.33, which it's done right now, and with some volume, which it's not doing right now. Not seeing a ton of volume on Procter & Gamble. If you see that break, then you could see an intermediate shift. We're going to watch this very closely. Again, institutions could be shaking out of this, but I don't think this recommendation or this sell analyst is going to shake it too much. 84.69 is the long-term resistance level now. A break above 84.69 is going to fundamentally put the shift and the onus on the bears to come in and either put their claws in or they're going to lose their taste and the upside could have a catalyst. Otherwise, you're going to see that the bulls are going to have a challenge, and you could see that the market, especially if there is fundamental changes with the future policies that could be coming into play by the Trump administration, that could put some pressure on the stock. But at least now you have some context of 11-day and 375-day ranges rather than just saying buy, sell, or hold. All right, folks. That's it for Tech Talk right now. Join me at 4:30 Eastern Time. I'm going to be back. I'm going to wrap up all of today's trading action. Thanks, and we'll see you here at MarketStream.live.